Yo, what's going on, believers? Happy Friday. It is Friday, July 14th, just before noon Central Time. So, just going to do a follow up, if you will, of the higher time frame review and outlook that I posted as my last video earlier this week. And just talk about this week CPI and my outlook for the rest of the month. Guess I might as well get that part out the way now. But there'll probably be a follow up to this video, possibly Sunday when the market reopens, but no guarantee there. And I was feeling kind of bad in a sense, not that I owe anybody anything, but word is bond. I try to be a man of my word. I said I would post a couple of videos throughout the week. I actually did do the recordings of those videos, but because my sessions would be a couple of hours long, 2, 3 hours, and if I talk throughout it, then I have to keep those portions. Only the parts where I'm not talking can I like speed it up. And so there was a lot of those hours I was actually talking and giving game about what I was seeing and why I felt like certain things would happen or shouldn't happen and things like that. And it would have just been a very stressful situation trying to edit those videos. So I didn't do it. I apologize for anyone who was maybe hoping that I would post something. But I don't think I got people that care too much about what I got to say just yet. But I'll show some things I think people might be a little more interested. But for now, just getting back into it. You had enough time to read over the risk disclaimer. Gonna look at the economic calendar here. And so I'm already on right Wednesday, July 12th. CPI was the focus for me, and it came in lower than expected. So it seems that the Federal Reserve's plan to lower inflation has been working as far as the consumers are concerned. So CPI is more so focused on the consumers. PPI, which was yesterday, Thursday, is more so focused on the producers. Okay, but so that's enough about that. As far as economic calendar, let's get into the charts. So dollar chart here, we'll keep it with these. Well, the hourly being the lowest time frame that I'll dive into any details with. But if you recall, I didn't have any particular outlook for the month yet in my last video. There was possibly an outlook for the week, which I did give for S&P. So when I get to that, we'll talk about that. But really need to go to the dollar chart monthly here first. So let's go ahead and do that. So as far as a monthly is concerned, actually go ahead and get rid of this since it did break it already. But as far as the monthly was concerned, right, was mentioning the consolidation that was in between the two monthly inefficiencies, and that how June was an inside month, just meaning that it traded inside of the high and the low from May and it never took out either of those levels, and that the high and low then of June would be sensitive. So what I'm going to do here is actually mark up this specific level so that when I do drop back down to a lower time frame, I can see the price action around it and see if there was any validity to me saying that there would be some sort of sensitivity. But as we can see, 2 weeks in, still a little bit of time before the month, before the week officially ends. But 2 weeks into the month, seeing that there's been a nice bearish expansion into the lower portion of this monthly inefficiency, taking out all these swing lows down here. Going down to the weekly chart, so can calibrate that level. This is it here, the low of June there. And so as far as the weekly is concerned, not seeing any details as far as any sort of sensitivity, but these lows here, these equal lows, have been on my radar ever since it left in May. And so it failed to go higher. This was a draw that I was anticipating it reaching to. It failed to get here, and started to turn around. Left this inefficiency here on the weekly, which it was respecting as far as, yes, it colored outside the lines. Bodies of the candles never were able to close inside or above that range, so still a good sign. And now going down to the daily chart. So the last thing I mentioned as far as the daily chart is concerned were this bearish breaker, which was already, this had already closed below it. So it's just a matter of confirming it as a bearish breaker and seeing price respected as resistance. It did so. As you can see, on Monday, price was able to travel up to about the halfway point of it, and then it quickly rejected lower to close as a bearish candle. Not yet though taking out this low, and not yet on Monday trading into this inefficiency here on the daily. But I did also mention that the high of this candle would be a likely target if it was to respect this bearish breaker. So it did in fact engage this candle on Tuesday, all of this ahead of CPI. So it actually respected the breaker, took out swing lows, and broke this daily inefficiency all before CPI ever even came out. And so there was another breaker though that I had mentioned that I wanted to qualify and make sure that it was broken to confirm as well bearishness. And that was this up close candle here from Monday, April 10th. So essentially just the low of this candle, which is now where my crosshair is. Any close below that would also been significant as far as the violation of that bullish breaker, which when breakers are broken, typically there's some strong price action that follows, especially if there is high impact news like CPI, FOMC, NFP, things like that. But so Tuesday, I mean actually, so Monday actually closed below the breaker. So Monday was a nice confirmation for a bearish week. And then like I said on Tuesday, when it closed below this inefficiency as well. So now there was basically two confirmations for lower prices on the week ahead of CPI even being released. And then what happens between Tuesday and Wednesday, open up with a gap lower, and then just a very volatile and bearish day on Wednesday with CPI coming out. It was able to take out these relative equal lows here, as well as the equal lows here, all on Wednesday. Thursday with the follow through as it was inside of that monthly inefficiency. So it was able to dig through into the lower half of it. And then see here on Friday, currently with about 6 hours left in the daily candle. So far, it did print a new lower low. So every day so far took out the previous day's low. And as far as the daily is concerned for today, possibly going to be like that tail on the weekly candle, right? So like as the week finishes up, any push higher off this low before it closes is basically going to be the lower end of this candle or the tail, right? So that's that. And then last but not least, going to the hourly, and keep in mind my focus is still going to be this level here. I want to see some sort of sensitivity there, because it also didn't really show much sensitivity on the daily chart here. But let's look at the hourly. So as far as the hourly is concerned, so this level is actually here. So this that monthly low, right, that was taken out. And so a little bit of sensitivity on the hourly chart. So yellow price, of course, is the weekly opening. Spent very little time above the opening price of the week. This was essentially that wick above on the weekly. So just going back to the weekly real quick, right? So this wick up here is essentially this movement here, higher above the opening price, and then it started to drop. So this is all Tuesday, to be honest. It's starting at 6 here. This was actually already the Tuesday daily candle, but it moves lower underneath that old monthly low, came back up to it on 3 different occasions on the hourly interval, broke lower, like I said. So Tuesday had already broken that daily inefficiency. That's this brown shaded area here. It's from the daily. And then going into when it shifted to Wednesday, open with a gap lower, never came up to fill in that gap, right? Never even retested that opening price. And then with CPI, which happened at 7:30 Central Time, this is the hour in which it happened, it just began to sell off dramatically for the rest of the week, breaking all of those lows that I had already mentioned, digging into that monthly inefficiency. And then as we get down to Friday, right, there was this inefficiency that could have held as resistance. It was able to break through there, created a new inefficiency here. And so far, that's kind of where it's just sitting on top of as it consolidates to most likely in the week, just moving sideways here as it's already delivered a large expansion. So I like to call this pretty much the market just needs a breather, and it's taking a breather right now. But then going over to the E-mini S&P, and also get rid of this. Now, a couple of things I mentioned about this in the last video. Last month was extremely bullish. This month at the time was a down close month, so it was a green candle, and I was mentioning this old high stood out to me. It may potentially want to retrace to it. It got really close before turning around, but it was very bullish, like I mentioned. And as it was a green candle, I also mentioned how that could potentially just be setting up the lower end of the monthly candle, printing the tail before it was to flip back bullish. And so far, it's done that this week. Going down to the weekly chart. So this weekly candle here, I mentioned how it was an outside bar and it was a lot of momentum. And so with last week being an inside bar to this week, I was very interested in the high and low of that week. But also, I've already deleted it, but I did have this up already, this Fibonacci on here to see about the retracement, if it could get into the discount area of it for some sort of a bounce back higher. And so, as you can see, it was these yellow lines where I was saying I wanted to see the response if it was able to get into this range between the two yellow lines. It did so earlier in the week, and so I'll leave this up here now as I go down to the daily chart so we can look a little bit more intimately into that. But while I'm on the weekly chart, just wanted to point this out as well, that this range here, or these two ranges here, were also areas that I mentioned that, shout out to ICT. He taught me that these will be very likely draws for price to reach to. The larger area being a volume imbalance, and then the smaller area inside of that that's shaded darker, an actual liquidity void, just meaning that there was zero trading in that range. There's no candle body or wick in that range, and so price would tend to reach up into that or down into that when they exist. Going on to the daily, so just want to keep in mind at first the Fibonacci, right? So this expansion up here, looking for a retracement into the yellow area. And like I said, I was also keeping in mind that old monthly high. So it did tag that first yellow level on Monday, rejected from there, closed higher, and then just straight bullish for the rest of the week, seeking this inefficiently traded area up here and deliver very handsomely, almost up to the half a deviation of that range of that week. So just basically taking that range, cutting it in half, and then adding it to the top of it. That's that minus 0.5 level right there. So almost made it to halfway as far as the expansion is concerned, halfway of the range of that outside week that printed that bullish engulfing candle. But now I'll get rid of the fib because it's no longer important. We're able to see that on the daily. Dropping down to the hourly chart just to get a view of the whole week, right? So yellow line is the weekly opening price. So early in the week, I was watching primarily this inefficiency, which is actually on a 3 hour, right? So you see this little gap right there in price between this low and this high. So I was watching that 3 hour inefficiency initially, and the bodies of these candles up here. So all the trading I did earlier in the week on Monday was just to target that. Wasn't really keeping in mind leaving something open to run here ahead of CPI, because anything could have happened and I didn't want to put myself in a situation where I was trying to do the most. But you live and you learn, right? Always learning, always growing, always changing, hopefully for the better. And so moving forward, things like that, right? Just note to self, like, hey, if there is a weekly level above that's not too far and there's high impact news and nothing shifted as far as the direction that it had been moving, it doesn't hurt to leave something on to see if it may want to reach up into that, weekly or higher time frame level, which is exactly what it did. Dug right up into this range here. Although I was kind of concerned that it could act as resistance upon first touching it, and it actually never did so. It smoked right into it on this up close candle here, and then from there it just kept going. But so back to the hourly. So once on the hourly, as you can see, was able to work its way into that range, filled it nicely here, did reject at the top, but only traded back down to this down close candles here. Perfectly acted as support, sent price above to finally close above it on the hourly interval. It did retrace back inside the range, and then from there, Tuesday it just took off, right? And then going into CPI on Wednesday, which is still drifting higher. CPI comes out, pops higher, does retrace, but I was watching this hourly inefficiency that was created with CPI initially, acted as support, and then from there just chugged along higher until recently this morning at 9 o'clock, printed a high of the week and is now currently in a retracement, a potential reversal as well. Just keeping in mind that it did trade into weekly levels, and so some sort of a retracement would definitely make a lot of sense, to be honest, heading into next week. Not that I expect this month to all of a sudden flip bearish, but I wouldn't be surprised, let's say, if next week was some sort of choppy down close candle on the weekly, and then that's setting up for another run higher potentially to end the month. But again, this is just me speaking about some potential scenarios. There are a bunch of potential scenarios. That's why I don't like to put any sort of analysis, like a hardcore analysis, out when there's a lot of uncertainty about what is to happen as far as the news and things like that are related, are concerned. But so that's this on the hourly. Now what I just want to do is go through a couple of other assets, instruments, pairs, if you will. And I did want to ask also, for any of the listeners, like, what's your favorite instrument or asset or pair to analyze or trade? So you can drop that in the comments. Let me know what it is that you have found some sort of liking with, some sort of connection with. But just again on the daily, here looking at Nasdaq. As you can see, also very bullish week. Dow Jones also very bullish week. And one thing I do want to highlight is that actually yesterday was a little bit difficult with US 30, because I was anticipating it to also take out the high from Wednesday, as everything else did. As far as the other indices, this is Wednesday's high. Look at how far away it pushed away from it on Nasdaq. This is Wednesday's high. Look at how far away it pushed on the S&P. And then for some reason, US 30 had this down close candle inside bar, but it did leave this inefficiency, which today early it traded down to handsomely and rejected higher. And so still, like I said, short term bullish. I would really like to see it reach this 34,900 level. And then if a sell or anything like that is to potentially happen, I'd be more willing to take that risk on once this level is traded to and I get some sort of sell signal, rather than trying to anticipate that it's not going to get there and start looking for those sell opportunities now. So yeah, still bullish on indices. Nothing has changed at all. Um, Also, as far as the watch list is concerned, I did add two this week: AUD, USD, which I think will be great for like London session, Asian session opportunities, and it moves relatively slow compared to like EU and GU. So also, if I miss something in EU and GU, I may be able to catch a little portion of AU following along in sentiment and sympathy. And so GU also, so that high, that monthly inefficiency, it completely smashed through there once it rejected initially there on Thursday, was able to smash through there, seeing a retracement back into the weekly range now. Euro USD, so on a weekly chart, similar to S&P, it's got this volume imbalance here, and so it was drawing up to there, smashed right into there. Added USD CAD, so that was the other pair that I added. It actually, this dotted line at the bottom there is actually just the midpoint of this candle. So I do like how it traded down to there and rejected. So on UCAD, I'm actually watching for this upcoming week how it responds, similar to S&P, but the fib was anchored the opposite direction, so it's from low to high. This time it's from high to low, and so it's measuring the retracement back into the range from this high to this low, and anything above 50%, ideally between the two yellow lines, would be a great selling opportunity for continuation lower if in fact the dollar is also still bearish, because the first part of this is USD. So how the dollar is moving is going to be very influential on the price action in USD CAD. UJ, so following along with the dollar index, very bearish. There's a lot of the weekly levels that it smashed through that I was like, I doubt that it's going to come back up there. And this was probably like by Wednesday already. So I went ahead and already shaded them brown from blue because they were potential support zones. But once they had got smoked with CPI and just looking at the daily and how bearish it was, so now they are potentially resistance ranges now. If prices to start to right move back higher, I will have to be aware of these levels, the high or the low and the high of each one, as well as the midpoint, to be able to see if I get some sort of feedback or information I can use moving forward. And so I'll leave it there. That was pretty extensive, to be honest. Didn't plan on going into so much detail about so many things, but like I said, I didn't take the time to edit the videos that I did record because there was lots of talking that I didn't want. I would have to listen to it all over again, figure out what was like important in a sense to not like remove the sound for and then speed up. And again, it just would have been a stressful process that I didn't want to go through with. But hopefully, you found some value in what I've produced today. And if there's any comments, questions, concerns, of course, hit the comment section. Holla at your boy, and I'll catch y'all on the next one. Shout out to the believers. Shout out to the dreamers. Shout out to the homies that inspire me to be better each and every day. I love you. I appreciate you. Y'all be safe. I'll catch you on the next one. Peace.